This episode is brought to you by Google Gemini. With the Gemini app, you can talk live and have a real-time conversation with an AI assistant. It's great for all kinds of things, like if you want to practice for an upcoming interview, ask for advice on things to do in a new city, or brainstorm creative ideas. And by the way, this script was actually read by Gemini. Download the Gemini app for iOS and Android today. Must be 18 plus to use Gemini Live.
Okay, I have to tell you, I was just looking on eBay where I go for all kinds of things I love, and there it was.
That hologram trading card. One of the rarest, the last one I needed for my set. Shiny like the
designer handbag of my dreams. One of a kind. eBay had it, and now everyone's asking, ooh, where'd you get your
windshield wipers? eBay has all the parts that fit my car. No more annoying, just beautiful.
Whatever you love, find it on eBay. eBay, things people love.
Hey guys, Akil here. Welcome back to the Trading Coach Podcast. Today, I'm going to share with you a trader evaluation where we speak and help a trader out who is, let's just say, fighting between two ways of trading. And this is going to be an awesome episode, and it's kind of nostalgic because it brings me back to really the turning point in my trading career. So just to kind of give you a brief recap of my trading career and why it's so important, right? I was a stock trader. I went to Forex because I thought I could make more money in a quicker amount of time using less money. I ended up quitting 3 of my jobs because I wanted to fully focus on trading, thinking that I'd be successful in no time. I was not successful in no time, but since I had a lot of free time because I was unemployed, I would surf the internet looking for solutions, usually like systems and strategies, the normal stuff. Eventually, I came across this article in FX Trader magazine where I read about a trader who had competed in a trading competition, liked what I read, went to his website and filled out something called a trader evaluation. Now, I filled it out with no expectation of actually hearing from this person. I thought it was one of those things where, you fill it out, maybe you get some spam email about, give me money and I'll give you signals. But lo and behold, I actually got a call from him later that night. And it was on this call when I realized that, I had a problem, right? What my mentor ended up doing was giving me a trader evaluation where he asked me a little bit about myself, a little bit about my background, and eventually after a little bit of the kind of massaging, we got into the bulk of my problems, which was the trading plan or lack thereof. And long story short, he would consistently ask me questions about my trading plan. I would try to lie and give answers that weren't really answers, right? You know how it goes. He would call me out and then I'd make up some other type of answer. Then he would call me out, and eventually after getting punched in the face over and over and over again, I kind of just gave up and said, I don't have any of the things that I'm supposed to have. And that was the first time that I really realized that, 1, I needed help as a trader, but 2, that trading was very business-like, meaning it wasn't something where you just come into the markets and you have this natural intuition and feel for it, where you actually have to treat your trading like a business and follow the proper steps to getting to that point. And although I don't do one-on-one trading evaluations anymore, humble brag, I'm way too popular. There are too many people. My time would be booked up forever if I did that. We do them every once in a while in our live trading room. And that's what we had today, where a trader brought up a trading idea. Originally, it was a technical idea. We were going to break it down from a technical perspective. But as we unpeeled the layers of the onion, we found out that there was some bigger concerns at the root of the problem. And that's the part of the story I'm going to share with you today. I can't help you in terms of confirmation because here's what I would say. If your reason for entry is your automated software telling you that it's a short, then that is your confirmation. That is your reason for entry. That is your rule. You did the right thing by following it. You should not need extra confirmation if that is your rule, right? Extra confirmation is just going to confuse things. Again, it goes back to the time when I used to trade, not an automated system, but a mechanical strategy. And my job was simple. When the mechanical strategy is called the SOS, right? When the mechanical strategy, maybe that should have been a warning sign, SOS, now that I think about it. It stood for strength of signal, but now that I think about it, maybe it meant I was going to be in trouble. Never thought about that. It was there in front of my face the whole time. But the problem that I had was this. So I traded the strategy and it was simple. When I got a red arrow, I was supposed to sell. When I got a green arrow, I was supposed to buy. And if I was supposed to trade a strategy, don't ask questions, no ifs, ands, or buts, just do it and you make money. The problem was I would start second guessing because I was a price action trader. I love price action. So I would see a red arrow that meant sell on my price chart, but then I would start analyzing it myself and be like, well, we didn't get this, well, we didn't get that, right? And I'm analyzing it using all these things that have nothing to do with the system. The system had nothing to do with structure or double tops or double bottoms, but I would convince myself not to take a trade because it didn't have the things I wanted, even though the strategy had what it wanted. So that's why I say, like, if your trading plan, if the D in your trading plan is you decide to enter based off your automated strategy saying sell, then you don't need to look for anything else. You don't need any confirmation. You shouldn't ask any questions, right? Because all of your in your back testing of that strategy, did you look for outside confirmation or did you just back test the automated strategy taking the trade? Which one? In your back testing, did you look for other forms of confirmation? So if we're assuming that this strategy has an edge, it's profitable, and it's profitable based off of you just taking the signal and not adding any type of confirmation, then why should we do something different in real trading? We know why we are doing something different in real trading. Emotions, fear and greed, right? We get scared in real life. That's the why. But should we be doing that? And the answer is no, right? Trust yourself. Trust the system. Trust the signal, right? You don't need any more confirmation on the chart. It's not always correct. It can't detect manipulation. Well, let me ask you this. Was it 100 when you back tested it? Was there a 100% win rate? No. All right. So the expectation shouldn't be that it's 100%. Correct. I feel very comfortable saying this, but there is no strategy that is 100%. Right? Shocker alert. I did the podcast the other day. I don't know if you guys saw it, breaking down the Trading View trading challenge. Right? We broke down the top 5 traders, looked at their stats and stuff like that. For you guys that saw that podcast, were any of those traders 100%? There was a guy that had no losses, but that's more of active trade management. But no. So we shouldn't expect to be 100%. It can't detect manipulation. So here's the question. Another question. Can you detect manipulation? Now, I won't get into the fact of manipulation, right? Manipulation isn't even a real thing, right? Or rather, it's nothing that we should be concerned about. But can we detect manipulation? Okay, so how can we make a difference then? Right? If the system can't detect manipulation and we as traders can't detect manipulation, then don't we just have to take it into account? Yeah, right. So again, this is fear. This is fear. This is fear. This is a perfect example of fear, right? We have a trader that has a system that I'm assuming has a positive expectancy, that I'm assuming has been back tested, and I'm assuming has been proven to make profit. And we're doing everything in our power to not trust the system. Why? Fear. And this is the hardest part about trading is we spend a lot of time finding or creating something that works, but then it's so hard to trust it in real life. It's so hard to actually just let it do what it's supposed to do in real life because we want to overmanage. We want to overcreate. Again, the thing about manipulation, right? Market manipulation is not anything we should be afraid of. Is not anything we should fear. Market manipulation, again, if you believe in manipulation, which again, manipulation, I don't believe in manipulation. It's just the way the markets work, right? But even so, market manipulation is present in the thousands of trades that were back tested, right? So if you've done the work in back testing, you've proven that your strategy can be profitable amongst the quote unquote manipulation. So should manipulation be a fear? No. So we got to be very careful about creating stuff, right? Trust yourself, trust your back testing, trust your system or strategy. And if you're in a position, again, this is why I stopped doing that mechanical strategy. If you're in a position where you just don't trust something else, like I trust myself doing analysis, understanding that I'm wrong a lot, but I am very comfortable living and dying by my analysis. When I traded the mechanical system, I was not comfortable living and dying by what I thought was a random. Well, I knew it wasn't a random signal, but for me, it was a random signal. So I never quite trusted it. And because I never quite trusted it, there was always that little hole in the dam where a little bit of water would seep through. And you know how it works. If you have something that has a hole in it and there's a lot of pressure pushing on it, eventually that hole cracks, and that cracks get bigger and bigger and bigger until it eventually breaks. And that was my experience with a system that I didn't trust. Because I didn't trust it, I was able to kind of do okay with it for a while. But every time I would second guess, every time I would question, every time I would disagree, that trust got less and less and less. And then eventually the whole thing fell apart. So I'm not saying ditch the strategy, right? But the two choices are this. One, put yourself in position to trust it completely. Or two, if you know that based on who you are and your philosophy and your thoughts, if you know that, man, I could never trust this completely because of X, Y, Z, then you may want to consider a different strategy, one that you do have complete trust. What I'm trying to do is I want to analyze auto stuff, but want to use price action myself for confirmation. No. Why? Is your price action analysis going to be exactly the same as how the automated thing analyzes the market?
This episode is brought to you by AWS. Amazon Q Business is the new generative AI assistant from AWS. Many tasks can make business slow, like wading through mud. Help! Luckily, there's a faster, easier, less messy choice. Amazon Q can securely understand your business data to help you streamline tasks, like summarizing quarterly results or doing complex analyses in no time. Q got this. Learn what Amazon Q Business can do for you at aws.com/learn more.
This episode is brought to you by LifeLock. The holidays mean more travel, more shopping, more time online, and more personal info in places that could expose you to identity theft. That's why LifeLock monitors millions of data points every second. If your identity is stolen, their US-based restoration specialist will fix it, guaranteed or your money back. Get more holiday fun and less holiday worry with LifeLock. Save up to 40% your first year. Visit LifeLock.com/podcast. Terms apply.
Why should it go hand in hand? So if it's hand in hand, why not just trade price? Why not just do your own analysis? If it's exactly the same. So let me ask you this question: do you know how your automated system works? Like, do you know what it looks for when it analyzes? What does it analyze? What is it looking for? How is this signal created? I guess in the short. I know it's probably very extensive, but like in the shortest way possible. Like, what type of trades does it analyze? Does it pick out? Like, what are the parameters? Yeah, that's not an answer. I want to answer. What does it technically look for? All chart patterns, every single chart pattern. That was to be my next bit, Ann. So I would first dig into understanding what your automated strategy is actually identifying. And I would say this, so if it's looking for all chart patterns, and that's not an answer, because do you know how many chart patterns there are? Again, I don't know it, so I don't want to place judgment, but I would highly doubt it looks into and trades all chart patterns, because they're everything is a chart pattern. Like, two candles next to each other technically is a chart pattern. There are simple chart patterns. There are classic chart patterns. There are advanced. Does it trade Gartleys and stuff? And ciphers? Butterfly, sharks, 5 O's, 3 wise men. inside days, like it trades all of those. Like all chart patterns is a lot. Like who was it? Tony mentioned the other day. We were talking about Thomas Bulkowski's book, The Encyclopedia of Chart Patterns, and how it's a good reference guide. And it just you go through that book and you look at it. That book doesn't cover all chart patterns, but you go through that book, and there are millions of chart patterns. There's literally not millions in the book, but. So I don't think, I would assume it doesn't trade all chart patterns. It probably trades certain chart patterns. So maybe figure out what chart patterns it trades and then learn them on your own. But again, it's not, if it's trading all chart patterns, which is something technical and not mechanical, I don't see what extra confirmation can come from you doing price action analysis. Because like if the system is trading a double top and I identified a double top, I'm just identifying the same thing that the system is, right? That's not really, it's not confirmation. It could be peace of mind. Yes. Peace of mind that I saw what the thing is seeing, but it's not, I don't see how it's confirmation. Does that make sense? I don't know. I'm trying to think of a better way to articulate it, but I don't see that as confirmation. I see this as you fighting between two ways of trading. You having an automated system and then you wanting peace of mind by analyzing it yourself. I think Ann's advice is the best advice, where it's like, hey, you scratch both, right? Have your automated system, have its portfolio running automatically on that portfolio. And then create a different account, different portfolio, however you want to have it, of price action trading, where you're allowed to trade yourself, discretionary trading based off price action. And that way you can you have your automated thing, which is making money on the side, doing what it does. But then you also scratch that itch of like, hey, I'm actually analyzing the market and looking for opportunities myself. I think that's the best way. But I just, what would be your best advice to fix this clutter? Just take the signals that the system tells you to take. Nothing less, nothing more. Because it sounds exactly what I used to do, where it was self-sabotage, where I would have a signal, but then I needed to agree with the signal. And again, if we go back to your back testing, right? And I want to be very intentional about this, right? Our back testing tells us if our system has an edge. Am I correct in saying that, guys? Like when we back tested our system in strategy, that's what tells us that, hey, this thing works or this thing doesn't work. In my back testing, did I also analyze the market and provide confirmation for every one of those signals? If you did, then yes, you should do that in real life. If you didn't, then here's the thing. If you didn't go through each of those automated systems historically, or signals historically, and also do your own analysis to provide confirmation for that signal, then in the most respectful way possible, your opinion and your analysis has nothing to do with the system's profitability. So if it has nothing to do with the system's profitability in your testing, why are we adding that element to real life? Right? Why are we doing something different than the thing that has proven to make us money? And we spoke about why earlier. So, should we be doing that? I guess is the question. And that's the question that you'll have to answer. But for me, it sounds more like a psychological situation where it's like, hey, I'm trading this thing, but I don't really trust this thing. But I would feel more comfortable if I had confirmation in the form of my own analysis. Does it sound like I'm hitting on the right kind of chords here with that? Where I would feel more comfortable if I analyzed the market, or if Akil would analyze the market to take the trade. But what we have to accept is that our analysis has nothing to do with the system. And that's the downside of trading an automated system, guys. Like there's pros and cons, right? It's kind of like Enigma, right? The pros are it's going to churn out signals for you. The cons are you may not agree with all of them. And if you've made the decision that I'm going to trade this automated system, you've got to trade it. You got to be all in. You can't pick and choose which of the signals you trade. You got to be all in. You got to say, hey, I'm going to put your emotions aside. I couldn't do that. I am too emotional of a human being. I couldn't do it. So I said, get out of here, system. I'm going to trade myself. But everyone's different, right? So you got to make that. You got to ultimately make that decision, because I don't think what you're doing is going to work. I think there's going to be a clash and an eventual kind of breakup. Because imagine you're short here and you do your analysis, or I do my analysis. I'm like, oh man, this is an awesome long opportunity. You got to buy this thing. And now you're like, And all it takes is one like trade that you leave early or you miss, and then it just stems to other things. So that's my opinion on it. I know it's not maybe what you wanted to hear, but in my experience of trading personally and working with hundreds of thousands of traders, that's the problem that it sounds like to me. And the solution I gave you is unfortunately the one that is best fit. But I like Ann's idea of like, hey, again, if this thing's making you money, don't ditch it. Scratch that itch somewhere else. Open up a separate account, separate portfolio, do your price action trading. It doesn't necessarily hit the stem of the issue, but maybe it's something that will help a little bit. Hope you guys enjoyed the podcast. Remember, share it. It is a big way to support the show. We've been on fire as of late. I want to keep that fire burning, so share. And also, if you haven't done so already, leave me a rating and a review. It would be an excellent Christmas present. This is the time of giving, so give me a review. 5 stars if you feel I deserve it. Seriously, thank you in advance, and it is a great way to support the show and keeps me motivated to keep pumping out more episodes. Until next time, plan your trade, trade your plan. Take care.